I'm going to be doing a little bit of a market update for you, just to see where the market's at on the sales side and then also on the rental side as well. I am Elisha. I work for Concentric Sales and Lettings, and I'm the branch manager there. I've been in the industry now just shy of 11 years. I know I don't look old enough, but I have also been with Concentric for 10 years. So I've been with this company, helping landlords like you guys stay compliant, sell properties, buy properties, rent properties for a very long time now. We have also been informed that the council have been given £60 million to actually enforce this Renters' Rights Act, which is a lot of money, and they will be looking to utilise that £60 million. If anyone thinks that the sales prices have actually increased over the last 12 months, anyone think that they decreased? So they have actually increased over the last 12 months, which is positive news. It is a small increase from what seen over the last couple of years, but an increase is an increase, guys. So it is going in the right direction. According to Halifax, average price has now surpassed 300,000 for the first time ever. So it is still good news on the sales market. Current asking prices of new homes listed in April, just shy of just over 370. That's a 0.8 increase from March. Again, pretty low. But again, an increase is an increase, guys. Less than average increase for this time, which usually sits at 1.2%, but still an increase. However, supply is high. This is on the sales market, so this is all over the UK. I will be going into it regionally a little bit later on. But the number of available homes for sale is the highest it's been in 11 years. And a third of existing homes for sale are seeing a price reduction. Demand is steady, despite a little bit of uncertainty in the market. As I'm sure everyone knows, everyone's fighting at the moment. So there's uncertainty there in terms of, mortgage rates, people moving, etc. Prices of fuel going up. So there's a bit of uncertainty there, which is why the buyer demand has come down slightly. But it is still steady. Buyer affordability has helped with average earnings being increased. And then we'll also see a little bit later on that, on the rental market, how it's potentially affected that. And the average 2-year fixed mortgage rate has risen from 4.25% to 5.442%. However, we have seen that on the news that there is a lot of high street lenders that are actually now competing. So those mortgage rates are coming back down now, which is good news. So a regional snapshot of the Northwest, which is obviously where we're based. The average house price is just over 270. Month-on-month change is 0.4%. Year-on-year change is 2%. We are the third highest in the Northwest for price increases. So that is fantastic for capital appreciation. And an average time to find a buyer is around 60 days. So that is probably a little bit more than what we've seen over the last couple of years post-COVID. However, we are the third quickest regionally. So that is still positive news for where we're sitting today. House prices in Liverpool, the average is 230, across just shy of 5,000 transactions over the last year. Most popular were terraced houses, to be expected, then followed by semi-detached, and then flats come in third place at around 150. So, leasehold market. There was around just under 1,300 leasehold transactions in the last year, making up 25% of Liverpool's market. Now, I'm sure some of you have heard about the Leasehold and Common Hold Reform Bill. Ground rent capped at 250, then peppercorn after 40 years, which is great news. And then they are also banning the sale of new leasehold properties. So if you are thinking of buying a leasehold, potentially maybe a new development, then this is something that's actually good news for you guys, and because they're going to be going into common holds. And what that means is you'll own the actual flat itself, and then you'll all have a say in terms of the actual communal areas then, rather than just having a lease on the actual apartment itself. So that's not in yet, but it is coming in. Now we go on to the UK rental market. Now, assuming most of us here are landlords, and obviously we are renting properties, have tenants in properties, looking at what our rental market is like. Now, the average rent for new lets in the UK is 1,374. That was as of February this year. UK rents have risen 3.5% over the last 12 months. And that's just over the last 12 months. We've seen a hike of rent increases over the past however many years post-COVID. Now, that's the slowest rate for 4 years, but that's still a huge increase. So we are still going in the right direction in terms of, cash flow on your rental properties. Looking at the Northwest, the average rent is 944, and the annual change in rent is actually 5.7. So we're a lot higher, nearly double, than what the UK average is for rent increases. So we're the second highest annually change for the North East. So North East is currently first, we're the second, which is great. North East don't beat us on capital appreciation, so we do actually beat them there, but they do beat us just slightly in terms of the rent increases. Now, rent increases can be a touchy subject with some people. How many people in here over the last 12 months has increased their rent by 6% over the last 12 months? I know a few landlords that I speak to are a bit nervous about doing it. Might have had tenants in there for years. Now, don't forget this 6% is just in the last 12 months. We've seen rent going up for the past, 5 years. So if you haven't put your rent up, say, in the last 5 years, you're very much behind. And that is something that you do need to look at and consider, especially when you are potentially looking at exiting in the future. It does devalue your property. And as we'll go on to a little bit later, it's a lot harder now to actually, serve notice on the tenant. It takes a lot longer. So you may want to consider if it's something that you're thinking about, whether it's actually suitable to sell with the tenants in situ instead. But the rent is a big thing on that. So definitely something to consider there, guys, for the ones that haven't done it. Supply and demand gap is narrowing. So there are 15% more homes available for rent. So there is broader choice for tenants out there, which we are seeing ourselves. It's just going back to a bit more normality than what we've, been used to for the past couple of years. It's just going back to that, really, where there's just a little bit less applications, a little bit less demand, but there's still plenty there to go and run with. Two big factors, 78% decline in migration and improved mortgage affordability. So people previously that maybe couldn't afford to buy, we have noticed now there's a lot more buyer demand. So those people that were renting are then going into a mortgage instead. So homes are taking a little bit longer to rent. Time to rent a property has increased to 20 days on the market. In Liverpool, the average is between 20 to 25. This is almost 20% slower than a year ago and 42% slower than the pandemic boom. So I'm guessing everyone remembers how chaotic it was after the pandemic. It just seemed to go absolutely crazy. I think we received, 10 applications in one day for one property. It was crazy. We are just going a little bit back to normal. So it's not bad that the demand has come down. It's just going back to normality. So we are just seeing a slight decrease, but overall, the market's still really good there for the rental side of it. Prices are still increasing, and the tenants are still there. They've not gone anywhere. What do we expect to happen to the rents in 2026? We're just shifting back to normality. The modest supply-demand imbalance does still exist. We are predicted increase in rents by 2.5%. So again, we are still going upwards rather than coming down. We're not seeing any crash on the sales, the rental side of things at all. So yeah, it's all good news overall, guys. It's just a little bit of a shift on both ends. As I mentioned earlier, if you are thinking of selling, there's a lot of things to actually consider before doing so. One of them I've already mentioned is, the rent. The rent does devalue the property if you want to sell with a tenant in situ. As you all know, your landlord, your investors, you need to make it work. You need to make it stack. Lender criteria is a lot more stringent now, stress tests, etc. So if you want to sell with the tenants in situ, instead of actually going down the route of serving notice on your tenant, definitely something to think about now. And we can actually just look into more detail on whether you need to do some things first, work on the rent, make sure it's compliant before then actually going to the sales market, because those are all things that will bring the property price down. If it is a property that you've probably had for years and the property price is much, much higher than what the actual rent could be, then obviously there's other options that we can look at in terms of, potentially serving notice, etc. But looking at the compliance, looking at your options and actually seeing, whether this service would be right for you guys. So if you are looking, these are some things to actually consider. So have you actually looked at the returns? Is it something that you actually want to sell? You may be at that time in your life where you think, I don't actually want to be a landlord anymore. You may look at your properties and think, they're actually not making me any money, but are you really maximising where you can? So again, rent increases. Can you obviously look at new mortgage rates? Is that due? These are all things that you can maximise the potential on your actual investments and treat it like a business. Some of you guys may only have 1 or 2 properties, but you still need to treat it like a business. At the end of the day, those are your properties. They may be something, obviously, retire, you want to pass down, whatever the case is. You still need to treat it like a business. So make sure it's profitable for you guys. As we're going to go into later, there's a lot of changes coming into force. It will probably affect your guys' income and profitability. So it is something now to consider, and especially later on in the year when phase 2 comes in on renters' rights, there's probably going to be more cost involved there as well. Have you actually worked out what you're going to get after the sale? Is it worth it? There's a lot of tax involved, so that's something also to consider in terms of whether it's not obviously the right thing to do. Have you taken into account, what you're going to do with the money after sale? Is it just going to sit in the bank? Is it for retirement? You're going to put it into, shares? That's also something to consider when you've got that money in your bank. What are you actually going to do with it? And also, have you considered the complexities of selling, rented properties and costs? If you do end up having to evict a tenant, you've got costs there involved. You've got council tax, you might have a mortgage still on it that you've still got to pay. We'll be going into, again, more detail later on some issues when you do serve notice to sell. There's a couple of sticking points that you want to consider as well on that point. If you don't sell it, you've got quite a lot of costs. You can't rent it for, a certain period of time. So again, these are all things to consider when thinking about selling your property and actually looking at your portfolio in more detail. And that's something we can help with. And we can also help with looking at rent reviews. Is your property, does it need to increase? So yeah, these are just some things to consider if you are thinking of potentially exiting before you go ahead and doing it.